Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty podcast. We have a great show lined up for you today. I'll have the opportunity to interview my good friend Clint Coons. We'll be talking about tax planning and, of course, the most important part, asset protection. You need to know how to protect your assets. Believe me, it's important. First up, you know what it is. It's the market review. We'll be talking about Cincinnati and, of course, Dayton, Ohio. Followed by Working Smarter. What does working smarter even mean in the entire real estate investing space, and how do you do that? And we'll finish it off with 4 tips to maintain sanity. Oh yes, you understand what I mean. There seems to be a lot of talk about just, you can't find any deals, etc. Let's be honest. This conversation's been in my brain for like the last year and a half. How do you stay sane? You'll find out. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. All right, let's talk about Ohio. So I'm from the state of Michigan. I hate the state of Ohio. Well, for obvious reasons, outside the fact that Ohio State University is just, like not a cool team. Sorry, Eddie. I'm just not a big fan of Ohio State University. But that being said, Ohio doesn't necessarily have bad opportunities. In fact, it has really good single-family rental opportunities. If you take a look at it, Cincinnati specifically, median household income $57,000, metro population about $2.2 million, roughly a pretty low unemployment rate, 4.1%, with a median home price of $115,000. Your monthly rent, though, exactly where it needs to be when you're purchasing property, between $900 a month and $1,100 a month. So, listen, the cost of living, cost of housing, still below the national average. And what does that mean for you single-family rental and long-term investors out there? Cincinnati is a buy. Columbus, Ohio, also a buy. I would buy there, even though I don't like the state of Ohio. All right. Clint Coons is up next. He's a good friend of mine. He's from Anderson Business Advisors. You want to pay attention to this conversation. It's a really, really important one All right, so let's get to Clint Coons, good friend of mine. He's an asset protection attorney. He understands what it takes to protect your assets. And there are a lot of things that I've learned from him, even when he was speaking, when he continues to speak around the world, around the country, and of course, at the Think Realty conferences. I'm always taking notes. I mean, this guy understands what it takes. So, Clint, welcome to the show.
Thanks for having me on. Appreciate it.
You got it. So, I mean, we're good friends. You connect a lot with audiences everywhere that you go. I remember at the Think Realty Baltimore event, after your presentation, I think the entire room emptied out. And you were outside at the table, and there was like a lineup of folks to talk to you. So what do you do exactly? Give me a quick rundown of that and a little background on Anderson Business Advisors.
Sure. So at Anderson Business Advisors, what we do is we help individual real estate investors all over the country protect their assets, but we go about it in a little different approach in that we look at real estate investing as a business. As I've heard you talk about many times, I mean, you have to take that mindset approach when it comes to real estate investing, because if you don't, you're going to miss out on opportunities, and then you actually may prevent yourself from moving your investing forward. And at Anderson, the firm is comprised of real estate investor attorneys. I've been investing for 19 years. I have a portfolio of over 100 properties spread out across 14 different states. And the experience that I've had in growing my own real estate, I don't know if I call it an empire yet, but my own investing is that there's a method to this. And so many individuals, when they start out in real estate investing, they get hung up on the asset protection side or the tax planning side. And they really don't understand the business planning component. And so what you saw there is when I got done speaking, this was an aha moment for many of those investors in that room, because they had fallen into that trap of thinking, well, I just need to focus on this or I should focus on that. And they didn't see the holistic approach that they should be taking to help really grow their business and their investing.
So a lot of the concerns that business owners will have, especially in the real estate space, Clint, is, well, geez, do I start with a Wyoming LLC? Do I start with, do I have an LLC in my own state? And I know you got a lot of those questions even after some of these breakout sessions as well. What's some advice with that? I suppose, let's start with asset protection real quick. What do I need to know as a new real estate investor, or maybe even as a pro real estate investor, because let's face it, some pro real estate investors are also clueless about asset protection. So maybe break it down for me real quick. Give me like the 1, 2, 3 punch.
So here's what I would tell you is that don't just focus on the asset protection. It's really important that you have asset protection, but it has to fit into your overall plan, because at the end of the day, you need to ask yourself, what is it that you intend to do with your investing? Are you just going to buy one property and then you're going to call it quits and you're going to make $500 a month? Or is it something that you intend to actually work on and grow and create a portfolio that's going to produce passive income for you through your retirement years, create a legacy of wealth? Well, if all you did was look at asset protection, you said a Wyoming or Nevada LLC, something like that, great, you're going to get the asset protection component. And it may not actually be the right thing for you. I mean, typically when it comes to asset protection, what we're going to tell people is set up an LLC in the state where the property is located, because if you don't, you're going to run into issues. Let's say if you need to bring an unlawful detainer action to remove a tenant that's not paying, you can get bounced out of court. And a lot of people fall into this trap. They read about Wyoming, Nevada, Delaware, and they think, oh, that's got the best asset protection. That's where I need to go. Only to find out they're hurting themselves because that's all they were focused on and they didn't understand the larger picture. So building your business is about understanding that. And so what I tell people, I said, listen, if you're going to go set some of these entities up, make sure the person you're working with is a real estate investor and they've been down that road before and they're doing what you're doing.
That's really, really important, right? Especially even on the accounting side. I mean, you talk about tax planning, business planning as well. There are a lot of people that will offer advice, but that are very unlike you, Clint, right? Mm-hmm. Like you are a real estate investor. You have properties in the 14 states that you mentioned. So getting with somebody, connecting with somebody and a firm like Anderson Business Advisors that is comprised of real estate investors is like, duh, right? Like you wouldn't go to a doctor for dental advice. That just doesn't make any sense.
So well, technically, I guess dentists are doctors.
But you know what I mean.
Even I'm a doctor as an attorney.
All right. Well, you know what? Fine. I would not go to an MD for dental advice. There we go. I'll be a little more specific because I know that's specificity is the world that you live in. So what do I need to know about tax planning as a real estate investor?
We see it really comes down to this. So I'll give you an example. There's this real estate investor. He decided to purchase this multifamily unit and went to a CPA because that's who he'd been working with for years. And CPA said, oh, you should create a limited liability company to hold this property. And he set it up for them. And they put the multifamily into it. And the CPA explained to him that he could set it up one of two ways. He could have it taxed as an S corporation, or he can have it as a disregarded entity for tax purposes. And if he set it up as a disregarded entity, you won't have to pay me $750 a year to file a tax return. So you're going to save a little money. Look what I'm doing for you. So that's what this guy did. This is about 4 or 5 years ago. Well, the CPA didn't understand the individual's motivations. That in setting up or purchasing this property, his intent was to stabilize it, get up the occupancy, and then turn around and sell it. It wasn't a long-term hold for him. CPA didn't know the right questions to ask, so he didn't know how to set them up properly. And if he did, he probably wouldn't have understood this. So he set him up with this disregarded LLC. So everything works fine. And then when the individual tried to sell the property, that's when he ran into problems because he wanted to sell it, cash out, take all his money. Because with any type of multifamily, you don't want to carry those on installment sales because the guy that comes in and buys it from you may not know how to operate that type of property.
That's right.
And they could just destroy it. Yeah, I mean, you do this all the time. So you understand what I'm referring to. You're stabilizing properties. You're selling those. If an operator comes in and they're inexperienced and they buy that property, they could run it in the ground within a year. So you want to get cashed out. So here's what happened. He tries to sell the property and the buyers that come along keep falling out of underwriting
Mm.
because the lender keeps asking for a copy of the tax return associated with the LLC to verify rents and expenses. And he couldn't provide one because it was set up as a disregarded entity.
Oh.
And I saw it right away. And I said, that's your problem. And he said, I know, they keep asking for tax returns. And I tell them I don't have them. I said, all this would have required is that you check the box to file a tax return for that entity when you set it up, and you wouldn't be in this situation today.
That's
now
right.
you're going to have to sell it on an installment sale, and you're going to hope that they don't destroy it. So that's what I'm talking about. And that's actually why at Anderson, we brought in a tax department into our firm, and we expanded it out, to over 220 employees, because we realize you need that sage tax planning advice where not only understand taxes and how to reduce them, but also how to run your business so they can help you through the different areas of your investing.
That's just a test, right? Like, you proved in like less than 30 seconds that if I had called you and been prepared and you understood exactly what my motivations were with this property, you would have solved my pain like that, right? You would have said, hey, are you going to sell this thing, going to hold on to this thing? And if you're going to do one of either, this is what you should consider doing. There are not a lot of attorneys out there. There are also not a lot of firms like Anderson Business Advisors out there that understand that from a real estate investor's perspective. And then you also said that there are also ways where me as an investor, I could potentially miss out on opportunities if I don't look at things the right way. Help me understand that a little bit, because that's very unique. I'd never heard that before.
Okay, so when I say look at it, it's how you present yourself. I teach events all over the country on this topic, and I'll have people come up to me during one of my events, and they'll hand me their business card, and I'll look at the business card, and it'll have two puppies on it or a picture of their grandchild, and I'm looking at that, and I'm thinking, what do you do? And they say, oh, I'm a real estate investor. I said, are you serious about it? Yeah, I'm real serious about it. Right. Well, look at your business card. Your business card is not telling me you're serious about your business. I'm looking at it as if, you threw something together and you're trying to be cute. Well, cute doesn't cut it in the business realm. And if the impression you create on people is so important. And as an investor, think about it this way. You're going to be borrowing money. So how do you want to look to banks? Do you want to look like the person with the puppies on your business card, or do you want to look like the person that has their stuff together and is serious about what it is they're doing? And both people could be equally serious, but it's that first impression that counts. So to your question, what I tell people is that the way you set up your structures is going to help you along the way. And one of the things I come back to many times is that when you're creating entities to hold property, everybody's going to set up an LLC. They think, all right, great. LLCs are the du jour of real estate investing. That's great. They are. But how you have those entities taxed from a federal tax standpoint, going back to my last point, not only about selling property, but about looking for financing, I typically recommend people set them up to be treated as a partnership. So we structure them so that they have a K-1 on their tax return, because when I'm working with an underwriter, I want to look like the professional real estate investor, because professional real estate investors, that's how they do it. They don't carry properties on their 1040 Schedule E page 1. That's going on page 2 on a line item from a K-1 right. They're getting from a partnership, just like your deals. And you're putting these deals together, and you're giving your investors, the people you work with, K-1. So it shows anybody who's looking at their return, which an underwriter would be, hey, this guy has moved to the next level. So it's giving me the assurance, if I'm going to loan you money, that you're a professional operator, that you're an experienced operator. And you may not have the experience, but your tax returns make it appear that way. So that's what it means about creating a business, understanding these nuances.
Totally. Like, if you don't set this up properly to begin with, I mean, I want everybody just to really pay attention to what Clint just said. If you don't set this up properly, you're really shooting yourself in the foot, and that's a major issue. So to prevent investors from shooting themselves in the foot, what's the best way they can reach out to you?
Well, they can go to our website, andersonadvisors.com. That would be the best way. They can go there. They can sign up for a free strategy session with us, and we can go through your individualized situation. That would be great. You can check me out on YouTube. Just type in my name, type in YouTube. My YouTube channel will come up. I have a lot of videos there and educational content just walking you through these various aspects of investing. Because at the end of the day, you want to make sure you're creating a plan that checks off all the boxes, that sets you up in a position where when an opportunity presents itself, you're ready to take action. You're not sitting there thinking, all right, well, I got to do this, I got to do that, or I don't look the right way to this person. All right, that should already be done. And then that's the approach I've always taken with my investing, and it's really helped me move my business forward, and I'll do the same for you.
1,000%. Clint, thanks so much. I appreciate you being on the show with me today. A lot of really good insights.
Great. Thanks for having me on. I appreciate it. Anytime.
You got it. Think Realty Nation. Get in touch with Clint Coons. Super easy to do it. AndersonBusinessAdvisors.com. And remember, if you fail to plan, you plan to fail. We'll see you in a second. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Check them out and say hi to Marco Santarelli when you do. You visit www.turnkeyrealestateinvestments.com. I love you, Marco. All right, this is what we're talking about, working smarter. What does working smarter really mean when you're investing in real estate? Well, I'll tell you something. If you're looking for property the old traditional way, which is door knocking, right? You can knock on doors, you can connect with wholesalers, which is also really helpful. But if you haven't started using technology to your benefit, I really think that you're losing the game. Very recently on thinkrealty.com, I wrote an article that actually is titled Working Smarter, and I think it's worth a read. More specifically, the small gold nugget that I offer at the end of the article, which is IDX. Anytime that you're searching on, say, your real estate agent's website or a broker's website, you're using the IDX platform. So consider typing into Google, in quotations, Atlanta Real Estate, followed by the letters IDX. So Atlanta Real Estate IDX, and it can potentially go a pretty far way. And you know what? Use technology to your benefit. It's here to support you and make your life a little easier. Okay? A little easier. So how do you stay sane in a marketplace such as the one that we have right now, and especially in a world that, quite frankly, is a little saturated? All right? I live in Atlanta, and I'll tell you, it can be really difficult sometimes to find a deal. So what do? Do I ignore my buying criteria? Absolutely not. Do I go and create a whole lot of activity in all the secondary and tertiary markets? Well, maybe. Bobby Birch had a couple of ideas, and I think he got these from Kevin Ortner and Greg Rand of Renter's Warehouse. And so, number one, don't buy into the short-term hype. There are a lot of folks out there that will inflate prices just because the market is what it is. Don't buy into that. Just because there's a bidding war, don't buy into the bidding war. And that's right, it is Bobby Birch that wrote this article for Think Realty online, titled 4 Tips to Maintain Sanity Amid Real Estate Madness. So definitely check out the article. Number 2, keep your goal in focus. If you want to flip to then buy rentals, perfect. If you're not buying rentals, then redirect your focus to also include single-family rentals. Number 3, exercise your mind and your body. It's not enough to be complacent, especially in your physical well-being. Get up, go for a run, clear your head, and then get to what really matters. Number 4, if you're not treating real estate investing like a business, you're losing the game here. Make sure that you absolutely run a business. Otherwise, you know what? You're just going to create a job. And who wants that? Not this guy. And not you, because you're special and you're listening to this podcast and you're watching this podcast. It's awesome. All right, that wraps up the show today. Certainly appreciate you tuning in. It's always a good thing. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing investment rental property at roofstock.com/thinkrealty. So I learned a lot. Hope you learned a lot. Get in touch. Go to thinkrealty.com/podcast. And until next time, happy investing.